Tom, I put this insane graph from Goldman Sachs on my X account this morning, and Micron and NVIDIA will account for about 40% of the S&P 500 earnings growth in the second quarter. Does that disturb you at all?
Well, it doesn't disturb me, but I'm going to break some news for you, Brian. I think what you're going to see happen in Q2 earnings that's going to surprise a lot of people is you're going to see one or more of these hyperscalers announce a reduction of Capex commitments.
Thank God.
Okay. And once you see that, because here's the deal, investors are impatient. We saw it with Mark Zuckerberg with the metaverse investment. The stock plummeted, and then he said, metaverse, did I mention we were going to invest $10 billion? Scratch that. Stock went up, okay? I think you're going to see that because, yes, they are going to get a return on invested capital. The problem is it's probably 18 to 24 months away. In the meantime, as you're seeing with $2.8 trillion lost this month in the Mag 7, investors are getting impatient. So what happens when one or more of these in Q2 earnings, late July, says we're backing off on commitments? I don't know that will necessarily be bad for hyperscalers. You could get a knee-jerk bounce. I think it's going to be terrible for the most crowded trade in the world, which is semiconductors and memory. You are going to see the leverage unwind in this trade abruptly, and most people aren't going to be positioned for it. And what you're going to see is the stocks that you couldn't give away, defensives, consumer staples, healthcare. Healthcare is sniffing this out. You saw in month of June, some of the biggest performers in June are United Healthcare up 12%, Lilly up 9%, J&J up 13%. Baxter's a company we own is starting to rip. Danaher's up. So if you don't have staples and some defensives going into Q2 earnings with tech, when this stuff starts to unwind in the semiconductors and memory, I think you're going to be disappointed. But if you have some ballast in your portfolio and some of the everything trade and things outside of semiconductors, I think you're going to be super happy. I think the relative performance of staples and defensives is at its lowest in 26 years. That's a once-in-generation opportunity to buy these. Even last week, you're seeing companies like McCormick, like Conagra, like all these food companies that you can't give away, Diageo, all starting to rip higher. There's a reason, and you might get faked out in the next 12 days with this stock trader almanac. You get a 2.5% bounce in the NASDAQ. That's the perfect setup into tech earnings. Draw everyone back in and then pull the rug. And I think that you have to be a little wary if that's where you're over concentrated. And if you're in indices alone, newsflash, you're over concentrated.
It's going to be a good week for me. Anytime my Monday starts with 2 shout outs of the Stock Traders Almanac. Good to see you all. Amazing insight to kick off this holiday short week. Appreciate it, y'all.